I told you guys that the best longs didn't come from following the buyers, but actually watching the sellers fail. I'm going to show you how I can find great setups with context and divergence of aggressors, and then watching absorption happen under the hood. So I like to watch the order flow. I don't trade order flow, but I use it for confirmation. So as you can see on the left here, we have a regular candlestick chart where I don't have too many things on it, just the value areas and the VWAP. That's it. Now, when I'm watching price, I like to look at something down here called the cumulative volume delta. All right. This is the session volume for the aggressors. Now, I want to make it clear. Aggressors are people who hit the market as a market order where they're buying on the ask and they're selling on the bid. When you see cumulative volume delta, that's only market orders. When someone puts in a limit order underneath price, saying that they'll buy a buy limit order under price, or they place a sell limit order above price, saying they'll sell at this price, those are the only things that do not register on the footprint chart. So this chart right in front of me solely shows aggressive market participants. That's it. So now if we can reverse engineer this, we can see where, and if you use Bookmap or you use any other software like the DOM, you can see where there's orders resting passively. And when you watch the interaction of aggressors versus passive players, it's literally like a show, like a soap opera is unfolding in front of you. So let's look at some context. But the main thing I want to show you here is when aggressive sellers fail and they literally run into an endless supply of buyers as they drive price lower and lower. And also how we can spot this in real time with divergence on the CVD. So the CVD just takes the market buys and it subtracts the market sells. So when you have a positive number and then you have a smaller number, you're going to have a positive CVD. There's more buyers than sellers. Now, if you have, say, 1,000 buyers and then you have 2,000 sellers, you're going to have a negative number. So then the CVD down here will actually turn negative because it will be under zero. So if we just look closely at this right here, if we could just make this bigger, if we look just at the CVD, anything that's above the zero line is saying that there's more aggressive buyers than sellers. And then when we pass the zero line, there's now officially more aggressive sellers than buyers at market prices, impatient, aggressive participants. This is usually retail, right? So let's just assume that this is retail. And let's assume it's a battle between market makers and market takers. The retail are the takers, and the large market makers are the ones that are setting passive buy and sell orders that retail is trading into or away from. Now, they're not always right. Market makers are not always right. They're not always going to win. But what we do know is that more times than not, we see the larger players win out. So let's go over this real quick. We're going to look at effort versus result. So if we zoom in here, we can see that as price was driving up, as price is driving up, CVD is also driving up. Now, I want to show you something. When CVD makes a high, we want to be making highs on price as well. But when price continues to make new highs, and then the cumulative volume delta does not, then what we're looking for is who's really stuck, right? Who's stuck? So we're going to start looking what is happening in the market. So if the cumulative volume delta is starting to go down, that means that the aggressors brought price up. Now we're met with sellers. So if we look at the profile, we can actually see that there's a lot of red delta. The red is the delta. So it's the more dominant of that price, sellers or buyers. All this red delta is happening in the middle of the bar and not so much at the bottom, but we want it to happen at the bottom because that means that sellers are getting more aggressive as price comes down, which is going to meet the passive buyers. But as CVD starts to head down and it keeps making lower lows, we keep making higher highs. And what's happening at the highs? We're seeing large delta buys at the highs, right? Here we had a green candle, but we had a red delta. That means we actually had more sellers on this bar than buyers, but price closed higher. Next bar as well, red delta. We have 2 more red delta bars, but price keeps grinding higher. So what does that show us? We have effort on the sellers. The sellers are the majority and they're the aggressors, but there's no result. Effort does not equal result. So now we have to look, who is the stronger hand? Clearly the buyers, because it does not take much to lift the market higher as a buyer. These sellers got so aggressive over multiple candles and could not move price. And the second a buyer steps in, price just rips right up with no volume needed at the lows. All the volume's at the highs. Now, classic market maker move, they're going to set passive buy orders right here at VWAP. All right. Once they set this passive buy orders, they're going to either aggressively sell or allow the sellers to win right now. Because whenever there was selling in this area where you see all this red delta, they were matched with buy orders, passive buy orders. The aggressors were hitting the bid aggressively, and the actual buyers were sitting on the bid right there, buying their sells. So when this happens, we have to look. We have to look at what's going on. CVD's dropping. That tells me that the aggressors are sellers. We get a large push down. If we keep getting selling at the lows, price should be going down. Price should head down, right? Large selling at the lows and large delta, the largest delta of the day. But price is not budging. It's actually absorbing. So what do we have? We have divergence on CVD, price going up, CVD coming down. That means sellers are getting really aggressive. So now, who is trapped on this move right here? Everyone who sold finally getting their way, they're trapped. Now, price just literally without any real effort rides right back up and traps the sellers once again. So this is an easy spot when you see the market open, boom, aggressive buying right at the open. Most institutions do their buying and selling right at the open. Market runs to the highs. Now steps in the retail sellers. Price doesn't move. Aggressive selling, price keeps going higher. Aggressive selling, price keeps going higher. Who's trapped? The sellers. So clearly the longs were the bias. The longs had the day. The stronger hands were the longs, and the market makers will not let the market fall. They'll just keep reloading invisible limit orders right into the hands of the sellers. And that's how they move the market. This is how the market makers move the market. They absorb aggressive selling. You can see on the DOM the reloading of limits at the same price. And then market just effortlessly turns up with just the smallest little buy. That's how you spot divergence. That's how you spot absorption. And that's how you can see how the market makers are trading. Best of luck.